So I want to take this time to do the best job I can to provide you some very clear, crystal clear information on what the CARES Act means for us business owners. This is my own research. This is also research that I've received from various attorneys, various CPAs. I've been on the phone with Treasury departments at banks. I've spoken to many people in the SBA. I've spoken to politicians. I've spoken to a lot of people. So this is a lot of the information that I have been able to gather, and I'm condensing it in such a way that you can make sense of it. Now, I'm directing this to business owners, not just entrepreneur doctors, but all business owners, because it is applicable to every one of us. So I want to go over a couple of different facets of the CARES Act and what we need to deal with now, but I have to separate it into two different divisions. The first one is going to be the economic injury disaster loans. We call these 7B. Loan 7B. And directly from the website, you can see here what the SBA says about the disaster loans. They're there to help us whenever we need things because of a natural disaster. And certainly the coronavirus is a natural disaster. And it's loans that are used to pay for specific things at this particular point. You can see those specific things here on the screen in front of us. We have fixed debts, payroll, accounts payable, and other bills that would basically be normal in the normal course of business. And I put the section of the law, which is adjusting this particular EIDL is what we call them now in the business world. It's amazing how many terms we've coined over the last few weeks. But section 1110 of the bill, if you want to read it for yourself, I've read the final bill now, as well as all two variations. A lot of information here that you can go back and check out for yourself. But here's what I want you to realize. This is not the forgivable loan. Okay, this is an actual disaster loan, the 7B categories. Let's go through that first. First things is for the eligible borrowers for this are small business owners with less than 500 employees. It's if you're a private not-for-profit, then you have to have something to sell. So what they've done there is they've excluded religious organizations. I've had several pastors who reach out to us and they say, "Hey, Justin, are we eligible?" Unfortunately, no. Now, I want you to keep that in mind, friends. As business owners, you know, we have a lot of revenue whenever times are good. We need to make sure that we're supporting those charities whom we know, love, and trust. And I'm sorry, I didn't mean to scroll there. And you also have to deal with substantial economic injury. Okay, I'm sorry, injury, substantial economic injury means basically you can't pay your obligations. You can't pay your obligations because of whatever reason. So think about the medical field. We talk about entrepreneur doctors that they have been shut down now. It looks like through the end of April. So we're talking maybe 6 to 8 weeks of not seeing patients. There are several business owners that we work with that are not in the entrepreneur doctor space that they can't go into people's houses at this point, and that's cut their revenue down. So this type of 7B loan is applicable to business owners who have some serious economic injury. The amounts available for us can be up to $2 million in this particular loan amount. It's based on the economic injury. So at this point, what they're looking at is about half of the prior year's gross profit, not to exceed $500,000. That's about the amount available. Historically, just for FYI, most of these loans have not exceeded $500,000 in loan amounts. So at this particular point, what we're looking for is a loan amount somewhere enough just to get us by. That's all we're really after. If you use a little bit of common sense here, then the SBA should be able to help us in these particular positions. So what would you use the loan for? So if we're looking at the abilities for this particular EIDL loan, then we can use it for fixed debt payments. So if you already had a loan or a mortgage or something in place, you could use this loan to pay those. You can use it to cover payroll, obviously accounts payable, and other bills that you just can't pay. I mean, this is basically meant to kind of bridge you through this natural disaster. You know, think about it in this terms. If in Tennessee, not too long ago, we had a tornado that struck down in north and east of Nashville. And this is the type of lending that the SBA provides to business owners. If you have a natural disaster that comes in and puts you out of business for a period of time, then you need to have some money or some resources to allow you to get through that time period. That's kind of the premise that you need to think about here with this particular loan. Now, the reason why so many people are bringing this up, and it's one of the things I want you to think about, is there's actually a grant involved in this particular loan. On this loan, it provides $10,000 in emergency advance. So here's where it gets kind of interesting. We'll talk about where you go in a second, but you go to the SBA website, you apply for this loan, and within 3 days of application, you can get an advance up to $10,000, which is not required to be repaid. So that's an interesting point that you can get. So you can get money now while your loan application is pending. Another point on the 7B loan, or this emergency loan, is you can still apply for 7A. And we're going to talk about 7A in detail below, but you can still apply for 7A. And if you receive any money from 7A, which again, we're going to talk about in just a second, then the advance is going to be used to reduce the loan forgiveness amount on 7A that we're going to cover in a second. So what does all that mean? You may strongly consider at this point going ahead and applying for 7B at this particular point, getting a little bit of an advance, seeing what the SBA will fund you on this particular type of loan, and then apply for 7A. So there's a game here we're going to talk about in just a second. I wouldn't say game, but a methodology that you could use to help you and your business and your employees and your customers in this time period. So we're going to go through that in just a second. One of the things you might want to know about this particular loan is that it does have an interest rate at 3.75 for a duration of 30 years, but it does, the act does waive the ability for us to prove our credit worthiness. It also moves away the personal guarantee on this particular portion of the loan. So maybe not a bad way to go here as far as trying to strategize, how are you going to keep your business afloat? The 7B, or the emergency loan in place, allows you to get some money, lengthen out the term of that repayment, have an interest rate that's pretty reasonable, 3.75. I mean, from a business perspective, it's just about half of what business loans were going for right before the downturn. Another thing is that you can defer your first year's principal and interest. It may be deferred. Doesn't grant us right that we're going to definitely have deferment, but it does give us an ability to defer some payments on the 7B portion. What will you need for the EIDL loan? Well, you're going to have to complete the application. Okay, we're going to talk about where you go in just a second. You're going to have your tax information. There's a form you're going to fill out that gives the SBA authority to pull your tax records. You're going to have your most completed copies of your federal income tax returns. You're going to have a schedule of liability. There's a form that you'll have to fill out, and you have to disclose your personal financial statement here for this particular loan. So where would you go now? I've actually got the link here in the slide presentation. You can Google SBA emergency loan, and it'll bring this up for you. There is no fee to apply. That's one of the things I do like. You can go ahead and apply, and if you are approved for X number of dollars on the loan, you don't have to accept the funds. So you can get a loan. You say, hey, I don't want to accept all. I don't want to accept some of it. I don't want any of it. I just want the $10,000 grant for right now. You can do that. The goal is to process the application in 3 to 5 days, and the goal is to actually fund the business owner's accounts within 30 days of the application with a lump sum deposit. Now, remember, the SBA has roughly about 15 days to finalize the details of this 7B and 7A. Now, 7B is already up and running. You can go ahead and apply for this on the SBA website. Several of our practicing doctors have received different types of words from their organization. I've seen some of the organizations or associations say, go out and apply for a 7A loan immediately. And that's not correct. What they're referring to is the 7B, the emergency loan here in place. And if you want to Google SBA.gov and go straight to their website, it actually shows you right there. Now, there's some caveats. If you go to the SBA website and look at this, I did just a few minutes ago, you can go ahead and apply, but then you may have to reapply here in the near future. And it gives you some disclaimer there as they're trying to work through this particular funding capability here. So let's switch gears, okay? Because this is where it gets confusing. Most people think 7A, and they're starting to throw the language of 7B into 7A. So I wanted to separate the two. So back to our slide presentation, think in the terms of 7A is back to that emergency, the emergency section here, okay? So let's go back. The economic injury disaster loan. These are already in place at this particular point. You can go ahead and apply now. There are some rules on the SBA website as it relates to the emergency disaster loan. Let's switch gears though, and let's go to the 7A, the Paycheck Protection Program. Okay, the Paycheck Protection Program. This is what, candidly, that many of us are most excited about. Again, 7B is not a bad strategy. 7A is a different strategy that you could utilize. So it comes underneath the Coronavirus Act, what they call the CARES Act. And basically they've appropriated $350 billion for paycheck protection loans to us small business owners. The 7A is where the loans are issued. Okay, so it's not the emergency loan that when you go to the SBA right now, you're not applying for this particular program today. Okay, we're applying for the emergency lending. And there's some confusion there that I'm starting to see, not only from customers or clients, but also from several associations. There's so much information coming that you've got to separate these two particular loan types. Who's eligible for borrowing money from 7A? Well, if you already were in business before February 15th and you had employees for whom that you were paying salary, again, I want you to pay attention. Independent contractors come into play here, first time ever. Okay, so if you're the guy who goes and puts tile in the shower, you are eligible for what we're going to cover here. It's not just those who have W-2 employees, and that's a little different than in the past with the 7A. If you, number three, have been substantially impacted because of the COVID-19. So one of our clients who've already emailed us this week, they're in the construction business. They want to go into people's homes. They can't. And I understand, and so do you. They have been substantially impacted. So now if you're the eligible borrower, you're going to have to make a good faith certification that you have been impacted. All right, you're going to have to do that. The second thing is that there is no requirement for the borrower's ability to repay the covered loan. This is kind of different. Used to, we would have to come in and prove that we could repay the loan. Now we don't. That's in this particular loan, that's the case. So we're going to have to certify that, number one, here's our qualification. All right. And candidly, I've already spoke to a business owner that doesn't meet these qualifications, but here they are. And this is direct quotes from the bill. You have to certify the current economic conditions makes it necessary for you to borrow the money. You acknowledge that the funds will be used to retain the workers, hence the name of the employee retention bill, and that there is no current or pending application for 7A for the same purpose. In other words, you can't double dip. All right, you can't double dip on this. Excuse me. So how much can we get, so to speak? How much can we borrow ultimately, because it's a loan, underneath this particular section? Well, it's 2.5 times the average monthly payroll cost, less than 100,000. I'm going to explain that, but it's based on the prior year's payroll cost. So it's going to take me a couple of slides to get through this, but basically you're looking at your average payroll over the prior year, and including in that your salary, your wages, your commissions, similar compensation. A question was asked on the live Facebook feed the other day. Hey, Justin, what about S corporations who pay themselves a W-2, but also get a distribution? Yeah, there was actually some clarification on that. Actually came out yesterday from a top attorney who read through the language, and they believe that because self-employed individuals and net operating income is what they're utilizing, that S corporations who have W-2 owners in place, that they're actually looking for the total net operating income up to that $100,000 range. So I'm thinking of several clients right now who they pay themselves, let's say $60,000 in W-2 comp, but they also receive another $100,000 in distributions from the S corporation. If that's you, then you're going to be pushing up against that $100,000 limit. That's how we interpret it today. Again, these things are evolving every second, and so many different people are giving misinformation on this. But you can see what you're going to use to calculate the particular loan available. So it's 2.5 times the average monthly amount. Here's the quote from the 1 year period before the date on which the loan is made. So we're going to talk about a strategy here whenever we're going to actually take the 7A loan. So we may be looking out at some point here in the near future. We may be 2 months from now before we pull this particular loan in place. What we're looking for is a trailing 12 months is the way the bill is actually written. So that it appears there's a moving target. And this is just my opinion, but when I read the actual language in quotes there, it just appears to be a moving target. Well, Justin, why does that matter? Well, let's say that you did some sort of a major distribution of profits in May of last year or June of last year. Well, we may want to delay you applying for the loan until we can incorporate in that particular payroll from June of last year going forward. What happens if you hired several people, as so many business owners did in Q4 or Q1 before this thing turned down? We may want to delay. So there's a moving target here is what I'm getting at in the particular language of the document. The also is the sum of the payments of any compensation to or income as a sole proprietor. So you're going to get a lot of different languages there. And this is where we were talking about if you're a W-2 S corporation, it's any compensation. Okay, that's the actual language in the bill. Well, Justin, I'm a partnership. I take net operating income. So that's any compensation. They're going to be utilizing your income perspective. So again, the key is that it's up to $100,000. So let's give you an example here. Let's say your company payroll is $50,000 on average per month. Okay. And then let's say that the owner's compensation is in the neighborhood of $175,000, whatever that number is. Then we're going to be multiplying. We're going to take our owner's compensation, drop it back to that $100,000 maximum, and then multiplying the two by 2.5%. We are 2.5 times, which gives us in this particular case, $145,883 in my example. But I want you to note something here, and this is vital. This is a lot of misconception. You actually read the bill and it's crystal clear. Whenever you're calculating how much the loan is for, it's calculated using payroll cost, but you can use it for a number of other things. But the loan is actually calculated based solely on payroll cost. Okay. There was some misinformation about that. Perhaps I even said some things earlier using loans and this, that, and the other. We've gotten clear guidance on that now, that this is exactly what the intent was. So now what can we use this 7A loan for? Well, this is, it's calculated solely based on payroll, but we can use it for a litany of things. We can use it to cover payroll. We can use it to cover the health insurance, including premiums, group insurance, salaries, commissions. You can use it to cover any mortgage payment. Okay. The interest of the payment, not the actual principal. You can use it for rent, as long as your rent agreement was in place before February 15th. You'll see some of those things. You can use it for utilities. You can use it for interest on other debts, as long as they were in place before February 15th. So we're going to be able to use the money for a lot of things. It's calculated solely off of payroll. It can be utilized for a number of other things. What are the terms of this loan? Keep in mind, it's a loan. There are no personal guarantees. There's no recourse or collateral unless you misuse it. Okay. Any of the unforgiven portion. So this is the key. Any of the unforgiven portion has a maximum duration of 10 years at a 4% interest rate. And you can defer the payments for 6 months up to a year. And the SBA is going to give us some guidance soon. They actually have a note on their website right now talking about that particular point. They're hoping to get some guidance. And here, a key factor here, the 7A loans are available up until June 30th. I want you to sock that away as a feather in your hat. We're going to come back to that particular point here in a second. All right, well, Justin, well, then how is the loan forgiven? That's what most of us want to know. Okay, the forgiveness, and here's the direct quote from the bill. Here we go. It's an eligible recipient will be eligible forgiveness of the indebtedness on a covered loan in an equal amount of the sum of the following costs made during the covered period. Here we go. This is where it's going to get interesting. We can pay payroll costs. We can cover our interest on our mortgages. We can cover our payments on any uncovered rent. Everything has to be in place prior to February 15th. Had somebody the other day say, hey, Justin, we just moved into our new location on February the 20th. Sorry, friend. That's not going to be covered under this particular loan forgiveness. Okay. So it's just the way the whole thing is working out. They put some lines in place. Whenever we're looking at the loan forgiving, the annual amounts in excess of the principal of the loan will not be forgiven. Forgiveness will be reduced proportionally by any reduction in the employees retained. Here's one of the things that I was even confused about, and then they actually came out on Sunday with extreme clarity on this. Let's say that you have laid off people Okay, what do you deal with? So here we go, the prior year or the period from January 1st through February 29th. We're going to talk about what happens if you laid off people. They actually clarified that yesterday. Forgiveness will be reduced proportionally by any reduction in pay. So let's say you're paying somebody $4,000 a month, and now you're going to reduce their pay down to $2,000 a month. Well, then you can't reduce the pay of the employee greater than 25%. Okay. And payroll costs eligible will not be paid to any employees over $100,000. So you're trying to pay yourself a bonus of $150,000, only up to $100,000 annualized compensation is what's forgiven. Here's what came out yesterday. Borrowers that rehire workers previously laid off from February 15th through April 1st shall not, and that was underlined, shall not have those numbers counted against them during such period for loan forgiveness purposes, so long as they are rehired by June 30th. We're going to come back to that on a play that we're actually going to be talking to several of our clients about today on this particular point here. Also, it says forgiveness will not be included in the gross income. So oftentimes whenever you borrow money and then it's forgiven, that forgiveness is counted as taxable income to us. That's not the case. The actual bill says that it will not be counted as cancellation of debt income for our income tax purposes this year. So let's just pause right there for just a second and deal with some points here just in clarity. Let's go back and just nail this down a little bit. What is it based on? It's based on how much payroll we actually have, not on where we spend it. How do we get it forgiven? We use the loans for these particular purposes: for payroll, for cost of insurance or group benefits, for employee salaries, for payments on any mortgage interest, not the principal, for rent, and for interest on any other debt. So there's a fair amount that we can use the loans, this particular money for. Anything that's not forgiven, we have a 10-year note at a 4% interest rate. We have no personal guarantees, and we don't have any collateral that's needed for this particular loan. Okay, so now, what documents are going to be required for us in the forgiveness category? They actually have already listed this on their site. We're going to have documentation verifying the number. Okay, that's the key, the number of full-time equivalent employees on payroll, and pay rates for the periods described in the various sections we just talked about. I've had a couple people say, Justin, what if I were to terminate 3 and hire 1 superstar? Can't do it. They're looking for the number of employees here. Okay. You're going to have documentation to prove your mortgage, your lease, and your utility payments. So you're going to have some canceled checks, some payment receipts, some actuarial statements, some account statements, various things to prove that where you actually spent money. You're going to have a certification from a representative of eligibility receipt authorized to make such certifications that, here we go, they say it right here, that the information is true and correct. So that may mean that you're, at this point, it may mean your banker, it may mean a CPA. We're going to get a little bit more clarity on that particular points here in the future. And then they threw us one more thing inside here that said any additional documents we may have to have from that the SBA deems we need. Okay, so they're trying to catch up as fast as they can. Why does all this matter? Hey, look, we're going to apply, but here's why it matters is based on what I can find, the SBA has less than 3,300 employees. And last year they approved a total of 58,000 loans. Okay. There is no way in God's green earth that the Small Business Administration can pump out the amount of lending to cover 30 million businesses as Marco Rubio put out there. There's no way. They don't have the ability or the bandwidth. So what are they going to do? They're going to go to their 1,800 banks in their program, and they also, the peers are going to deputize, is a term I'd like to use, additional banks to help with this process. All right, so we understand now that we have a couple of different positions. One of the things we want to look at is a strategy. You may want to consider laying off your employees before tomorrow. Why? Well, according to the rules that we just read, we have until, here we go, employees laid off from February 15th through April 1st shall not have those numbers counted against them during such period of loan forgiveness purposes, so long as they were hired by June the 30th. Okay. So we have several different business owners out there who are mandated. They cannot see people. The president yesterday said he's extending his guidance out until April the 30th. So we're talking about another month potentially not being able to work in some particular positions. If you find yourself in that position, you may want to go ahead and lay off your employees if, again, this is a business decision, if you think it makes sense. Again, I'm not giving advice here, friends. I'm giving you something to think about. I want you to talk to your advisors. Your advisors know you best. This is just education purposes. I see it today. Some of the things we're going to be telling a few of our clients is, hey, go ahead and lay the team off. There was a pickup in the unemployment benefit where a little higher than normal, depending on your state. The federal government threw an additional $600 on the unemployment benefit. So it could be quite advantageous for the business and for the employee during these uncertain times before you go back to work. Now, one of the things you want to look at is you may want to consider the rehiring date. Now, we don't know when we can go back to work for several different companies out there, but my point is look at the time frame. You may want to lay some people off today or tomorrow. The other thing you want to be aware of is that the loans are available in the 7A position up until June 30th. Depending on your particular profession, you may not want to apply for a 7A loan today. So let's think about this logically. Let's say, well, first of all, you can't quite yet. They're still going to give us some guidance over the next little bit, but let's make this assumption that we are going to not work for 30 days or not work for 45 days. We don't know at this particular point. If you run out and try to apply for a 7A loan just as soon as they're available, one of the things you're dealing with is, remember, the clock, so to speak, the forgiveness clock starts the date that you receive the money. So if you run out there and apply for it, and let's say hypothetically we could get it today or on April 1st, and now you can't work in your business or your practice until May or June, okay, you could be in a position to where you have the money and aren't able to pay those things necessary to gain the forgiveness. So the application and the receipt of these funds are very vital at this particular point. My caution to you is to not run out to your local banker right off the bat and say, hey, I need to go out and borrow a bunch of 7A money and it's going to be forgiven. Remember, you have 8 weeks of forgiveness. The clock starts from the time you get it to pay the next 8 weeks. So Justin, what do you think? Well, so many of our clients today, we're going to have conversation with various clients that are going to say, hey, look, you may want to go ahead and apply for the 7B. You may want to go ahead and apply for the emergency position. There's a $10,000 grant that could be issued in the first 3 days, depending on your particular number, that can also be used in the 7A position later on. Go ahead and apply for that particular loan. Get the amount that we feel, and every case is different. Some people we're not telling them to do this, but let's go ahead and apply for the 7B in some cases, and let's see if we can get X number of dollars for loan, and let's see if we can get a little bit of grant here. That's number one. Number two, you may want to lay your employees off because of the hiring date here. We'll go ahead and lay them off. It's a hard conversation to have. We're probably going to have some conversations about that. We're going to release on the podcast here very soon. So one of the things we're looking for as far as strategies at this point is go ahead and apply for the 7B, hold the 7A, look at layoffs at this particular point. As we go through this particular position, one of the things that I want you to also be aware of, this is the last point in the slide presentation I want to give you today, is that we can qualify for the employee retention credit. You may say, well, Justin, what is the employee retention credit? So the employee retention credit came under Section 2301 of the CARES Act, and it introduced a new bill for us to deal with that basically, if we are not receiving a covered loan under Section 7A, you say, well, Justin, I don't need Section 7A loan. I don't want it, but I do want a little bit of credits here. Well, this is something your CPA and your advisors are going to be working with over the next little bit. What it in effect is doing is it allows us to, in effect, reduce or get a credit for our payroll tax portion of our compensation. Here's the short and easy of lots of legal garbly-goo on this particular point is the credit is equal to 50% of wages paid to each employee up to a maximum of $10,000 of wages per employee. Okay, so basically $5,000 per employee for this calendar year is the credit that we can receive through this particular employee retention credit. There's a lot of information about there on this particular point. Still more yet is coming. What am I getting to, friends? Look, there's a lot of information moving left and right now. We're doing our best to try to stay ahead and try to get our clients the best information possible. I'm going to tell you that I want you to speak to your advisors, your CPA, your attorney, your CFP, your banker. Talk to your team. Be on the phone with them consistently. Do your own due diligence. There's a lot of information. And like I mentioned, there's still information out there about associations and trade associations who are giving just conflicting data. If you can remember that the 7B loan is the emergency loan that we want to look at applying for now, and the 7A is the payroll protection loan. Two different loans, two different sets of rules, two different loan amounts, two different requirements. One is immediately available. The 7B is available today. The 7A is not quite yet. Okay. The 7B, you go right to the SBA. The 7A, you're going to go to your banker more than likely and deal with that one. You've got a layoff. You got a layoff opportunity here. If you're looking at the future where you're not going to be meeting with patients, meeting with customers, you may want to go into laying off your employees over the next 2 days so that you can qualify for some of the reduction positions. You may want to lay off your employees as a business move. Okay. It's not a mean thing at this point. There's a significantly larger unemployment benefit now to the tune of $600 higher in the unemployment benefit. So I give you this information. I'm going to tell you to stay tuned on the Financially Simple podcast. Stay tuned on the Facebook channel, Justin Goodbread. Stay tuned on the YouTube channel. We're trying to simulcast live now in multiple different areas because the information is moving so fast. It's amazing how fast this information is. I mean, just on Saturday, I made a comment, and on Sunday, the guidance changed. It's happening so fast now. We have a group of people, professionals, who are here to serve our clients and serve those individuals who, again, my goal is to show our business owners how they can double their net worth every 3 to 5 years. Is it always possible? No. But that's what we're trying to do. We're trying to give them sound advice at this point. If you don't have a business advisor, you need some help, reach out to us. We do this on a regular basis, and we'll be more than happy to help you. Hey, look, I realize life is complicated. Life is frustrating, and life can be a little bit unnerving. Money doesn't have to be. Let's continue to make our lives at least financially simple. Hey, y'all go out and make it a great